So gold rises because gold is a monetary proxy inversely related to a nation's currency. So there you go. That's what gold is all about. Most people, unfortunately, don't know that. They think it's a risky commodity. Monday, September 22nd, 2025, Monaco 64, home of alternative economics and contrarian views. So it's almost 8 a.m. London time, and gold is surging to new record highs above 3,700. Silver is doing very well as well. Of course, it's not at record highs, but I think it's only a matter of time. And I'm not going to focus on the price, on where I think it can go, because I think that's totally academic and irrelevant now, because I think gold and silver are telling us that, yes, our whole currency and financial system is on its last legs, or more like gold and silver are actually revealing the true worth of the funny money regime. And I'm going to reference a pocket book of gold where Jim Sinclair and Peter Carlin talk about that, how gold is a revealer of falsely stated wealth. And talking about a pocketbook of gold, I've got good news. I've told you already that this book is going to be published again. Peter Carlin has contacted me. Hopefully he'll be on soon with me. He has been in contact the last few months, but he's had a few glitches. But yeah, hopefully this book will be a lot cheaper to buy when a second edition comes out. Also, I'm going to reference Jesse Livermore, world's greatest stock trader. And you might think, what's that got to do with gold? Well, because I think gold and silver, the current trade is a trade that's the mother of all trades, because it's betting on the failure of the system, of the financial system, and it's going to be huge. So before I go further, just wanted to say, yes, it's not too late yet to protect your fiat currency savings with some physical gold or physical silver or both. And over the years, since I started this channel almost 10 years ago, people have been asking me where to get gold and silver. Well, I tell them, do your homework, stick to a reputable dealer who's been around for decades at least. But I've also got a couple of affiliates. One is Miles Franklin in the US. There's a link below in the description. I've got a landing page there, but Andy Scheckman always says that it's better to call the brokers there directly on the phone. There's a toll-free number and they'll be able to help you. Same thing goes for here in the UK, my affiliate. I've been dealing with them since 2002. Gold Investments. They have a website as well, and there's a link below in the description. They've got some promo codes, but it's always great to call them. They will talk to you. Oliver and Simon Temple. They're both brothers. I started dealing with their dad, Mike Temple, who's retired now. So back to why are gold and silver going up so much now? Why is gold taking off? Well, I think what gold and silver are telling us is that the central banks are losing their idea that you can just print and create currency and credit out of thin air and that everything will be fine is unraveling. And that's something that I realized because of reading history. There's some other books which I won't touch upon today, but I do have a book recommendation playlist that you might want to look at. But the event that really convinced me that this was eventually going to happened in 2002. So yes, I've been very patient, and I haven't changed my view one bit since then. And that was when, I think it was November, don't remember the exact date, but that's when Ben Bernanke spoke at an economic club in New York or wherever, maybe Washington, D.C. It was his famous helicopter speech. And by then, I had already started investing in gold. I already had started looking at the history of the monetary system. I was heavily dedicated to learning about sound money in the Austrian School of Economics, free markets, small governments, sound money, all those great things. And when I read about that speech in the news, I thought, this is huge. Basically, Ben Bernanke said that deflation was the biggest threat, and that fortunately the Federal Reserve and the government had this great technology called the printing press, or digital. Now it was digital, and they could create dollars for nothing, and to make sure that you didn't get deflation. I don't know why central bankers hate deflation. I guess their deflation they talk about is, of course, when prices go down. They've got this Keynesian philosophy that if prices go down, people will just stop doing things, but it's not true. If prices go down, people will be able to save more, invest more, buy more. I think it's great, but in the end of the day, deflation actually is the destruction of currency and credit, resulting in lower prices. But that's a different story. But when Ben Bernanke made that speech, and at the time he was on the board of the Federal Reserve, he was not the chairman yet. It was Alan Greenspan. But everyone who follows or followed at the time central banking and the Fed knew that he was being groomed to become the chairman after Greenspan retired, and he did. So that was when I decided, well, we're down this path, and the Japanese already had taken this path of QE, money printing, and one of the reasons I thought it would end badly is because I read history. I read, for example, that in revolutionary France, they tried the experiment with the assignats. And even then, those assignats were backed by land that the revolutionary government had confiscated from the church and the nobility or the aristocracy. And that didn't work. And they kept printing and printing. And it ended in tears and the collapse of confidence. And confidence is still there right now in the fiat currencies, but I think that there are a lot of events that could trigger the loss of faith and confidence. One event, for example, is what's happening in Europe vis-a-vis France and the UK in terms of sovereign debt. And that goes back to the QE because the Western countries, US included, they wouldn't have been able to accumulate so much public debt if their central banks hadn't obliged with the money printing. And we're told that the central banks have controlled inflation, or CPI, but tell me honestly that it's a lot cheaper to get things today than it was 20 years ago. No, it's like our currencies by a fraction of what they used to, and now it's accelerating. And that's what gold is telling us, not just that the system is under threat and that the central bankers and the politicians, they've got no other alternative but to cut to do more QE, to do yield curve control, also to do what they call financial repression, which is basically lying about the bond yields, government bond yields, forcing insurance companies, financial institutions, pension funds to buy those bonds to keep the yields low so that governments won't collapse, because that's the problem right now. And government collapse means the collapse of the currency. So they're between a rock and a hard place, and that's what gold is telling us. So before we look at Jesse, we're going to look at Jim and Peter, Jim Sinclair and Peter Carling. Unfortunately, yeah, Jim Sinclair, he forecast, or he knew all this was going to happen too. He was waiting, I think, when he passed away a couple of years ago, the only pillar that he had that hadn't been confirmed yet was a bear market in U.S. Treasury securities, and we have that in spades now, and that's why gold is doing so well, and silver is going to do very well too. Don't neglect silver. So let's go to page 70, and I've done this before, but we keep getting new subscribers, and many of you haven't heard this. This is on page 70. Gold is a revealer of falsely stated wealth. And I would say as well, if you look at the financial news, they're all saying, well, the Dow, the NASDAQ, the FTSE in the UK, they're all making new all-time highs. Everything's great. But if you look at those indices in terms of gold, they're not doing great. And this is what this has got to do with here. So gold is a revealer of falsely stated wealth. When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. Well, that's what's going on. That depreciation is borne by the citizenry, who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. While you can control your own personal economic management, and hopefully many of you haven't mismanaged your personal economic affairs, the state, that's a different story. They're going to keep mismanaging, unfortunately. That's why it's so important to have gold and silver. Financial and military overextension has a social corollary in overpromised Social Security, Medicare, overstated real estate equities, affluence. Same things happen with real estate. Yeah, it's keeling over even in fiat terms, but in gold terms, it's even more. And especially with bond yields, mortgage yields, or rates going up, that's going to get even worse. As expense runs out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. Yeah, look at France, what's happening there. And even here, the moment the government cracks down on welfare spending and government spending, the unions are going to come out like a rash, and they're going to force the government to backtrack. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Yeah, I agree with that. Paper profits in real estate, myth. But long term, I think it's good to have real estate if it's not leveraged. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which once bought certain things no longer does, but wages have not risen along with prices. Yeah. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e. debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. There you go. A lot of luxury goods, like I think in Gold We Trust is talking about the Porsche gold ratio. Yes, that's going down, but when you're worried about feeding your family and keeping a roof over your head, you're not worried about a Porsche or anything luxurious, right? Government passes on the mismanagement of economic affairs to its citizens by devaluation. Yeah, well, that's one of the big things that's going on right now. Yes, and it's great. Well, not great really, but it's good for us who have managed our economic affairs properly by having a little bit of gold and silver, because that's going to protect us. But those people who haven't, it's not great. It's one of the reasons I do these videos. And of course, I don't have millions of followers or millions of views per video. So unfortunately, there's going to be a lot of people suffering financially from this, and it's going to continue. As the imprisoned money manager Martin Armstrong has artfully stated, and I quote Martin Armstrong, "The decline in the value of a currency is in reality a free market tax. Yeah, taking away wealth that is overstated, so currency can also be an indirect tax to compensate for the poor management of the state," end quote. The corresponding rise in gold, especially when it is a global phenomenon, as it is now, is in effect a devaluation of all the world's currencies and a restatement of wealth on a global scale. Yeah, as I speak here, it's not only the price of gold in dollars that's making all-time highs, it's also the price of gold in pounds, in euros, in Australian dollars, in Canadian dollars, in Kiwi dollars, in Chinese yuan. It's not just a dollar thing. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated and assumed wealth largely created out of the assumption of debts that cannot be borne. Yeah, there you go. Debts that cannot be borne. And the only way to keep this system going is with more debt, because when the central bank does QE, they usually buy government debt, and the government gets the cash from the central bank, so the government can bail out banks, they can bail out the taxpayer and keep going, bail out themselves. Must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. This happened to all currency holders, regardless if they personally assumed any debt. So gold rises because gold is a monetary proxy inversely related to a nation's currency. So there you go. That's what gold is all about. Most people, unfortunately, don't know that. They think it's a risky commodity. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. So I'm going to stop here. I hope that this is cleared up a little more, what's going on. If not, maybe ask questions in the comment section, or if you're on Patreon, I've got a Patreon as well. There's details in the description. You can join there and ask me questions for as little as $1 a month. And also you can come on my live stream. and ask me the questions. I do it every Sunday at 3 p.m. Eastern Time, U.S. time, 8 p.m. UK time. So now this book, what's it got to do with gold and silver? Well, it's not just gold and silver that are going to reflect this restatement of wealth. It's the gold and silver miners. And I think, yes, it's early days. It is tempting to take profit, but if you take profit now, you're going to have to go into the fiat currency that is dying. So what I'm trying to say is be right and sit tight. And that's what Jesse Livermore said. He said that people who did a good trade, and this is not really a trade if you're holding physical gold and silver. It is kind of a trade actually, but not in the normal sense of the word that you buy a stock with a broker. Yeah, you have the physical gold and silver, and your trade is that the currencies are, collapsing, and you're going to hold on to it. The other thing he said is that the big money, and in this case, I think is the big, or protecting your wealth, is made through patience. Yeah, he said it doesn't really take too much brains or intelligence. You just need to be patient as well and sit and watch. And there's going to be a lot of naysayers, of course, people who have never bought gold and silver who are going to say it's overvalued, but they don't understand that it's not gold and silver that are overvalued. It's the currencies that are overvalued, and now they're gonna lose value at a rate of knots because, as I said, central bankers and politicians, that's the only thing they know how to do, to print more and borrow more. And when that happens, the currency and credit increases, government gets even bigger, and real productive capacity goes down the drain. And there will be a point, of course, where there's loss in faith and confidence in government when people realize, wow, this is not going to end. This is unsustainable. And I think we're almost there. And with that, I'm going to wish you all a very good day and a very good start to the week. Take care. Bye.